Welcome to TheoTRADE. This is Don Kaufman. It's September 18th, 2024. 30 minutes left inside of a wild Fed day of trading. Fed comes out and fumbles, but it just handed us some huge opportunities in this marketplace. Allow me to explain that and much more here, of course, on this evening's video. I'll tell you, again, there's only 30 minutes left inside of the trading session. Anything is plausible over here. If you're looking at this right now and you're thinking, the reaction has been kind of muted, of course, to the Fed. And the Fed, they cut for the first time in years, 50 basis points. And they said basically, yeah, but the policy is still rather restrictive. I got to tell you, the 50 basis point cut, this is really, it's going to have this marketplace on the edge, people. You have to recognize in cutting 50 basis points, initially they're going to say, yeah, of course, it's front-loaded interest rate cuts. But at the exact same time, in the back of your mind, you're going to think the same thing every other trader is thinking. And that is, ruh-roh, what's wrong with this picture? So much so that they had to cut 50 basis points. And by the way, historically speaking, there have been only 2 times, okay, that the first Fed cut has been 50 basis points. Both times ended up in absolute and sheer disaster with the S&Ps, okay, trending substantially lower. But look, it's only been 2 times that this has ever been done. One of those, by the way, was September of 2007. Just figured I'd throw that out there. So again, just to clarify, what I'm actually saying over here is only 2 times in history has the Fed actually had their first cut be 50 basis points. And that is kind of marquee. And the problem that you've got right now to the marketplace, as I said a moment ago, traders are going to think in the back of their head every time data comes out. And by the way, I don't care what data it is. Like as soon as I heard there was a 50 basis point cut, all I can think is, oh, you better believe even tomorrow morning, the jobless claims, everybody's going to be looking at it. Leading indicators, everybody's going to be looking at it because they're all thinking the exact same thing. They're like, oh no, the Fed must have seen something in the data. Even if the Fed didn't, even if the Fed was just trying to front load the cuts, it's not going to make a difference. Every time an announcement comes out, it's going to turn into Mr. Toad's wild ride. Put an election in there, okay? Oh yeah, this is going to be a free-for-all. This is going to get wild over here, and the opportunities are going to be plentiful. Before I actually get into some of the opportunities, if you're looking at the trade right now, as I said, like you're thinking, oh, it's massively unchanged. First of all, you still have about 27 minutes left. Check this out, 27 minutes left. If you see the line on your screen right here, and we are looking at the SPX, and this is an intraday, 1 day, 1 minute, that line is unchanged on the week. You realize we're coming into the end. Again, the end of what? Wednesday. You only have Thursday and Friday left. And I'm starting with this because it's absolutely the pivotal thing to focus on between now and the remainder of the week. Like, look at this. You got Thursday and Friday. That, okay, is $100 expected move. It doesn't matter what you think. What you know, you have $100 of movement that could actually occur in this marketplace to tag the upper end or lower edge of the expected move. And right now, again, we're unchanged. Volatility, interestingly enough, even after the Fed is ever so slightly elevated. It initially had dropped substantially, but you got an 18 VIX. It's uneasy out there. The volatility futures, okay? The volatility futures initially had a precipitous drop, but here's something even more interesting. The vol futures are slightly higher right now than right before, okay, the Fed announcement came out. So I'm just showing you, this is what I kind of call Fed fumble. Okay, I think 50 basis points is egregiously large, but that's my opinion. But it's not about the 50 basis points being large. It's about the 50 basis points, again, constantly creeping into my mind saying like, oh, what's wrong with this picture? Okay, the dollar, knee-jerk reaction, dramatically lower, it rallied back up. Okay, the key point in here, I don't focus so much about where we are right now. It's about where we're going. Okay, and one of the things we're going to be going is going big. Okay, because again, 100-point expected move speaks volumes. If you look okay, even at the SPX, which is now going into a triple witching, okay, even for the September 20th expiration, it's still pricing in almost an $80 move, all right? Again, wild volatility being priced in for the remainder of the week. And again, the irony of that is right now we're literally unchanged as I record this. So let's actually look at some alternative products. We looked a little bit at volatility over here, which I think is critically important. Like it's not backing down. Bonds, okay? And we caught every ounce of that move. What we actually did inside of the bonds is I traded TLT. I traded into a TLT in-out spread yesterday, okay? There was a bearish spread. We caught it. We're already out. It's over a 30% gain in less than 24 hours. So the TLT spread is over and done with. I think there's going to be a lot of opportunities emerging here inside of the bond market. Now, this might be counterintuitive, but the bonds selling off is interest rates actually going higher. Okay, you're like, wait, the Fed just cut. Yeah, but it was already being priced heavily into the bond market. So now you're seeing some sell side activity inside of the bonds. Okay, again, sell side activity in the bonds, the volatility coming up slightly over here, but the dollar rallying. If the dollar continues to perpetuate gains to the upside, I think it's extraordinarily bearish for the S&Ps. But where do I see some of the bigger opportunities coming up? All right, as I said, I call this like Fed fumbles, but as I said, it just handed us, it's a big grapefruit out there, big opportunities. The first place I want to bring up is XLU. All right, utilities. Now I am in a utilities position and it is bearish. Okay, I think this one's actually going to play really nicely. I think utilities are going to get smoked. Okay, so this is something I'm absolutely bearish in. This is something I'm going to continue to trade for. Anything that bids those utilities a little bit higher, I'm probably going to continue to short into those, but I already do have an in-out spread in there. Another one that's very interesting, so off the beaten path over here, is the KRE. This is actually the regional bank ETF. Some of the wild volatility in here, okay? Right now, look, the KRE already spiked and pulled back, okay? On any other rally, I may actually try to short into there, okay? And this has everything to do with what we term unrealized losses inside of the bonds, okay? So you have to, again, look at this from the perspective. I'll explain more tomorrow here on TheoTRADE about this, but specific to the KRE, as we actually see the bonds, okay, they had a knee-jerk reaction higher. That knee-jerk reaction higher took the KRE higher. As the bonds start to sell off, it actually causes the KRE, which is regional banks, their unrealized losses to grow. So this is, it's all kinds of wild in here because the KRE is basically at highs. And again, you can pull up quite the chart in here. It's at some of the recent highs right now. It looks like it's going to break out. But I would take the other side of that all day long. The last one also that's really perplexing is the XLF, the financials, which are very close to all-time highs, not having the dramatic pullback that you might have thought, okay, would have participated in this marketplace and literally in the Fed announcement, okay. It's completely and totally unchanged. And here's the interesting thing, the participation in here, look at how wild the volatility is, okay? So I've got a completely different idea of selling some premium, specifically in XLF, because I got to tell you right now, I'm rather non-directional in nature in this particular product at this moment in time. The last aspect, okay, I'm going to revert back to volatility. There might be some good opportunities. Any pullbacks in VIX, again, any pullbacks in VIX is an opportunity to get long. As I said to you, the way that I actually look at this marketplace, not just in the next 2 days, look, to the end of the week, there's going to be volatility. There's a $100 expected move. I just went over that, right? So we're going to be rocking. But into next week, the week after, I mean, between now and the election, it's like every single announcement that comes out, okay, it's just going to start raining volatility. So any pullback in VIX, we're going to look to get long volatility. I've already got some long vol trades on right now, but that's something I'm going to look to add to the position. But it's got to set up a little bit. And again, those opportunities are going to be coming fast and furious. There's a lot of other opportunities looking at this. Look at this. We're still buying Walmart right now, okay? And this is up literally, 50% year-to-date basis, okay? So many opportunities, so little time right now. Look, okay, Volatility, that's the name of the game between now and the end of the week. Stay tuned. A lot more trades coming your way here at TheoTRADE. Thanks everybody for joining us here at TheoTRADE. Have a wonderful evening. Bye-bye.